morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the first quarter results of Massy Holdings Limited as well as Agostini Limited, two bellwethers of the local stock exchange, one in the conglomerate sector and one in trading. Now, both groups would have reported somewhat contrasting fortunes. Let's take a look at what those results were and what investors might expect in the coming quarters ahead. Turning firstly to Massy, well, for their first quarter ended December 2025, the group would have reported earnings per share of just about 10 cents, which was up 6.3% from the 9.6 cents recorded in that prior comparable period. Now, interestingly, earnings from continuing operations increased actually about 9.4% from 9.4 cents per share to just about 10.3 cents per share. Driving this performance was an improvement in revenue from continuing operations of about 5.5%. From 4.15 billion to just about 4.38 billion. Overall, profit before tax increasing that 10.8% from 303 million to just about 336 million, with profit attributable to equity holders ultimately improving 6.2% from 190 odd million to just over the $200 million mark. Now, contributing from a profit before tax perspective, we can see that there was fairly positive momentum across most of Massy's major segments, with integrated retail increasing quarter over comparable quarter by about 8.5 odd percent from 200 to 217 million. Cash products also improving just about 6.8% or thereabouts, from 88 to 94 odd million over the comparable quarters. Motors and machines recovering nicely or moving ahead quite nicely, just about 31 to 32 odd percent from 47 to 62 million. And there was somewhat of a decline, roughly 18%, in its financial services segment, the smallest segment, in fact, from 22 million falling to just about 18 million in profit before tax contribution. So generally a positive improvements or positive results across most of Massy's major operating segments or business segments. From a efficiency perspective, in terms of operating profits and overall profitability margins, we can see that there has been some degree of stability and marginal improvement, in fact, in terms of its operating and profit before tax margin. Operating profit margin in that reddish line increasing from 7.3 to 7.6%. PBT margins also improving from 7.3 to 7.7%. Ultimately, that profit after tax margin improved just about 0.1% from 4.9 to 5% over the comparable quarters. Now, when we take a look at one of Massy's major strengths in terms of its geographical diversification, we can see that that has continued to be a positive story over the past several comparable quarters. For example, Trinidad and Tobago, as a relatively important market for Massy, has declined from 43.7% in that first quarter of 2022 to just under 35% in the most recently concluded quarter. Meanwhile, Guyana has grown in importance from 19.8% to just about 25% in that reddish segment. And certainly, as a high-growth jurisdiction, this does represent certainly a positive trend and will be supportive of Massy in subsequent quarters. Barbados and the Eastern Caribbean remains a relatively important segment as well, at just around 25%. The USA is growing from a marginal 0.5% in that first quarter of 2022 up to 3.3% in the most recently concluded period, with Jamaica also notably around 8% in terms of overall or relative contribution to PBT or profit before tax by geographical contribution. So at a price of $3.65, Massy is trading at a price to earnings ratio of 9.8 times, which is broadly in line with the sector average of just about 10.5 times, with a dividend yield of a relatively attractive 4.9% compared to the sector average of just under 4%. So with that revenue growth in mind, stable margins, that geographical diversification, which is a strength, but market or policy uncertainties in its major jurisdiction, or right now geographical jurisdiction of Trinidad and Tobago, Bourse is maintaining a market weight rating on Massy with a watch outlook for the time being. Turning very quickly to Agostini, and for its first quarter ended December 2025, the group would have reported an earnings per share figure of 95 cents, which was a 3.1% decline from the 98 cents recorded in that prior comparable period. Revenues were up just under 6% from 1.48 odd billion to just over 1.56 billion. Operating profits, however, relatively flat at around 154.7 million. Finance costs increased 16.7 million from 16.7% rather from 15.5 million to 18.1 million, with ultimately profit attributable to equity holders declining just about 2.3 million from 68 to 65.7 million. When we take a look at Agostini's profit before tax contributions by segment, we can see that there was some fairly mixed bag in terms of performance. Consumer products increased just around 8% from 84.4 to 91.1 million in that purplish segment. Pharma and healthcare declined just around 10% from 48 to 43.2 million in that reddish segment. And energy, industrial and holdings declined just about 65%, the smallest by far segment for Agostini, from 6.5 to 2.3 million. So certainly a mixed bag, but of course, there are several acquisition initiatives in the pipeline for Agostini, most notably the acquisition of Massy Distribution Jamaica, which was recently concluded over the weekend based on reports, as well as the pending, already shareholder-approved Prestige Holdings Limited acquisition. From a margin perspective, we can see that there has been some downward trend for Agostini over the past several quarters, with profit before tax margin in that yellow segment, for example, declining from 10.7% in that first quarter of 2024 down to 8.7%, while operating profit margins has also diminished just a bit from 11.8% in that bluish column to 9.9% in the most recently concluding quarter. From a earnings per share perspective, on a trailing 12-month basis, there has been a bit of stagnation in terms of that trailing 12-month earning per share at around $3.30 per share. However, valuations have remained relatively stable, with the stock trading at a price to earnings ratio of 18.8 times, which is below the sector average, the trading sector average of 24 times, with Agostini also offering investors a dividend yield of 2.5% at this time, slightly below that sector average of 3%. So with revenue growth in mind, those continued acquisition activities which we mentioned, and relatively fair valuations, Bourse is maintaining a market weight rating for the time being on Agostini Limited, with a stable outlook again at this current point in time. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at info@boursefinancial.com. And of course, you can check out all of our research absolutely free on our website, bourseinvestment.com, and catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe and happy investing, and we'll see you again on the Bourse Report.